outside of trading, you want to have another list. These are like your core principles, your goals, your big three. So for your overall, if it doesn't improve my health, improve my relationships, improve my focus, if it doesn't put more money in my pocket or lead towards that, if it doesn't push my business forward, it's a big one as well. If you're trying to start a business or run a business, or you're the owner of a business, you might wear many different hats. Right? You don't have the luxury of having a big team or a lot of people to delegate to. You got to be really disciplined with your time. So you got to think about, if it doesn't move the business forward, then it's noise and should be ignored, or in that case, outsourced or delegated somehow. So you're not stuck doing bullshit admin tasks, especially now when AI can do a lot of that for you. You just got to sit down and actually create it to take those busy tasks off your plate so you can focus on getting closer to money. Like, you want to make more money, you got to be as close to the money as possible, cash flow wise. And you want to remove everything that's too far away from that. It's noise and it should be ignored. And from high level, you want to think about everything compounds. So if it doesn't compound either your time, so if the time I'm putting in isn't compounding positively, if it's not building a skill, so if what I'm about to do right now is not going to develop one of the skills I'm trying to develop, if it doesn't help me grow my capital, then it's noise. It should be ignored. Always that. So if it doesn't, and then list the things, at the end say it's noise, should be ignored. Because you're not, this lack of focus, it's not because you're lazy, it's not because I don't think most people are inherently lazy. It's just easy to be lazy. It's just easy to fall into traps because there's so much bullshit, there's so much distraction. But think of the times, so a lot of people say I get stuck doom scrolling on social media, playing video games or watching TV, whatever it is. But that's not true all the time. A lot of people who say that they're not able to focus, just think about a time where you've been under extreme pressure, or you're right up to a deadline, or maybe you've even just delayed something until the last minute and you've got to get it done, and suddenly you just drown everything else out. Right? The music goes off, the podcast gets turned off, YouTube shut down, you shut everything else off and you just start working, and you push through it, you get it done. Usually because there's some kind of deadline. Maybe it's a work deadline, school, exams, whatever. So you know you can do it. And the only reason that is because you've defined what actually counts. So you know it needs to be done by a certain point. You don't want to do it. You're delaying. It has to be done. Then last minute you're like, fuck, this needs to be done. I have no other choice. Gotta be done, boom, done. But you can do that for anything in your life if you actually practice this exclusionary thinking. Goes back to the lessons from a while ago about attention. That's what it's all about. Where are you putting your attention? Where are you focusing your attention? And write that down. Keep it close to you. Keep it on your phone. Keep it on your sticky note on your desktop, whatever, for each of those areas. Important too for training, really simple. Diet, really simple as well. If it doesn't meet 1, 2, 3 of your goals, then it should be ignored. Noise. Even little things like how you train. How many people just change their workout routine every week, when really it's no, what am I trying to do? Trying to get stronger? Trying to lift more? Trying to bench press more? Well, stop fucking around with all these different exercises. Just stay.
I'm a winner, but I recognize and respect that I have the potential to lose a lot of money today. That's why I will make today's number one priority to not lose more than my defined maximum risk. My only job is to manage risk and allow my profits to take care of themselves. The market is irrational and unpredictable. It will go lower than I think and higher than I expect. I recognize this constant unpredictability by staying humble. I respect the market today no matter how good or bad yesterday was. One day can't make me rich, but one day can make me poor. Just one day at a time. Right. I don't know how this works, man.
this step-by-step tutorial, I will show you exactly how you can add a take profit and stop loss on the Hyperliquid crypto exchange. I will also show you how you can add multiple take profits and stop losses. However, for this you already must have an account on Hyperliquid setup. For this I recommend you go below this video and click the link to our full in-depth step-by-step tutorial on how to set up a wallet and how to connect it to Hyperliquid. We have made a full in-depth guide on getting started with Hyperliquid. So if you didn't set up your account yet, go below this video, click the link to our tutorial, set up your Hyperliquid account and then come back. Additionally, when you create a new account with the link below this video, you will get a 4% lifetime fee discount. So you will save a lot of money and you will get the best trading conditions on Hyperliquid. Let's now get started. First of all, we do this on the perpetual futures section. For this, in the top left section where it says Bitcoin USD, make sure that you're on the perps section. In this case, let's use Bitcoin, and now you can see the interface on the right hand side. We put in the trade. First of all, we have an option to add a take profit and stop loss before we even enter a trade. So immediately when we enter the trade, we already have it set up. So when we take this, you can see a take profit and stop loss immediately. In this case, let's buy, let's long and bet on the market going up. The take profit for this, we will put to $110,000 and the stop loss will be to $97,000. Now you can see also our gain on the right side. If our take profit is hit, we reach 94% profit. If we lose 35%. Our size is only $15 US, but if you now add this to dollars, so when you click on this arrow here, you will see the exact dollar amount. When we now place an order with a market order, we will be immediately in the trade, and then you will also see we immediately have a take profit and stop loss. And there you go, we now have a take profit at $110,000 and a stop loss at $97,000. If you already have an existing order and you didn't add a take profit and stop loss yet, you can add it afterwards too. Make sure that you're in the position tab. If you're on balances, make sure you switch to position because that's where we have our futures positions. On the right hand side, you see TP/SL, then click on the pencil. Now we can add a take profit and stop loss at a specific price. For example, $115,000. Then we can also add an exact stop loss price, for example, 95,000. Now we can see the gain in percentage again and the loss in percentage again. Alternatively, we can also switch this to United States dollars, and then you can see $24 would be our loss, and below they again show the percentage. But maybe you want to take profits when your P&L is plus $10, right? You can put this in here, and now you will take profits at exactly a profit of $10. In this case, that profit is reached when the price is at 106,475. You can do the same with the loss. Let's say you only want to lose $5 for this trade. In this case, the stop loss will be at 97,600. So feel free to change this based on percentage, on dollars, or the exact price. Now we can click on confirm, and now we can see we have a take profit and stop loss added. If you want to add multiple or partial take profits, for example, take profit 1, take profit 2, take profit 3, you can do this again by clicking on the pencil on the right hand side. Then click on configure amount. Now if we slide this to the middle, we will close 50% of our position, and now we can also add a price. For example, $110,000, and again for the stop loss, $97,000. This is now our first TP/SL. In this case, we will close 50% of our trade if either of these is hit. Now click on confirm. If you now want to add an additional take profit or stop loss, click on the pencil.
I can't figure this shit out, man. What the hell? Oh, okay, I see now. We need more margin, bro. Okay. Now, what is $1? Perfect! Let's go! Okay, I figured it out. Risking $1 to make, bro, this is big. Perfect. It's exactly what I wanted to do. And now we log it in our journal for our submission. Alright, that's dope. Because I didn't know I could risk contracts. Cool. That's super dope. Figured it out. We're only risking $1 too. Before I thought I had to risk 10. I was like, shit. entry, stop loss. Cool, nice. Super happy about that. Now I can actually begin live trading. I am already live trading, but still it's just different. Because trading with funded accounts versus trading with your own exchange is just a little bit different.
By becoming rich. Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
Jim. Right, Tuesday. And we're getting pretty much what you'd expect, what I talked about yesterday. Low end of 60, high end of 80, that's last week's range. 70 being the mid. And we've pushed above that a couple of times. 70 has failed. We're now going to spend time trading down here, I would imagine. Sort of a slow bleed, as sellers have mostly been exhausted. I don't think there's enough willingness or enough time has passed yet for another wave of selling that would take us to new lows. So you get this automatic reaction bounce and then it just runs out of steam. There's no buyers, obviously. There's nobody willing to buy this beyond 80. The stuff people say on Twitter is just fucking retarded. They think like everything's a fucking shakeout and everything's just a V reversal. No, it's not. It's not how things. It's not how markets move. It's not how they work. It's not how they rebuild. It takes time, and we're in that. As I said, no surprise, volatility is going to come down. Your ranges are going to get narrower, and price is going to spend a lot more time drifting than it did last week. Because just as price starts to pick up and move a lot, people get used to it and start to think, holy shit, you know, got to be like aping in super. I said this on Saturday, or Friday, Saturday, wasn't it? Yeah. I said relax. I posted it in the journal as well. Don't get drunk on the big moves, the 10-hour, 15-hour winners and all that. It's gone. The market moved last week in a wider single week range than it has done in any week since 2022. And it was only percentage wise in these 2 weeks. It was the end of 2021 was the last time we had a week even close to what last week was. Even these ones weren't. The one of the 10th was, but when you zoom in on it, a lot of that really came in like a 1 hour period, because most of that was just concentrated inside of this crash wick. Last week was a full week, all the way from Monday, like a full week that was tradable the entire way, traded the whole way down. No crash, no, they call it a crash, but not like the 10th of October. No liquidation, it wasn't some big flush. People have this all fucking wrong, like they always do. Like they're calling it like a liquidation cascade. No, it's not. That is a liquidation cascade. Open interest nuked. Open interest hasn't budged on this move relative to what it was. You pull up the open interest chart, you see it from then, and even when you look at like the global, that's funding, global OI, take off alts. Everything's just fucking slop online, and it's just bad take after bad take after bad take, and that is not there was no leverage liquidation. This is notional OI. It's down the same amount as price. It was not a leverage driven sell-off. Apes have not been liquidated whenever OI goes down on Bitcoin 28%. And at the same time, price goes down to the lows 33%. That's more. So open interest fell less than price, which means there was not an excess of perp deleveraging, and the same on alts. That is a leveraged liquidation. This is not. This is the typical slow bleed that you get when the leverage has already been liquidated and price is just going lower. You can't see it because it's all fucked up, but you know that was a heavy leverage liquidation. You can just tell by the nature of the candles, and if this wasn't retarded, you would see a big spike lower. And then the rest of these moves were not leverage liquidations. Why? Because by that point, it was November until fucking May, and price was down from 69 to 37. So apart from a few people who went long here, who obviously get stopped out, there is no leverage. Do you think people, when people talk, do you think people have carried perpetual futures? Like, there's many ways to lever up. And this is a whole another fucking rant. But do you think that people have held perp longs on Bitcoin and on alts from November at 70k to fucking May at 35k? That's 50% down. What leverage? Once it goes down 50%, it takes out all leverage. Anything 2x and above, all gone. Not to mention the fact that most people don't trade that way. You don't trade that way. Even the biggest retard, Degen, doesn't trade that way. What do? You do stupid 20, 50, 100x and you get wrecked straight away. Or you just, and it's always step by step. It's like there was a build up of positioning on this move into the highs, and there was a continued buy the dip and adding and adding and adding, and then it fails, it rolls over, but people still think, oh, it's okay now, and I catch them fast. Boom, it's gone, shaken out. The leverage liquidation happens fast, like that, like October 10th, fast. Runs up, people get excited, start adding in, 3 or 4 days later, boom, smash. Why is it always a surprise? Because it happened so fast. Happened in 2021 in August. Builds up, builds up, builds up. Oh, let's get long. One day, wiped. That was the wipe. The rest of it wasn't. This next push wasn't even a wipe. This is just, again, glitchy. That's the actual liquidation. This is not, these are all over the place. But that you can see. Flushes. So, this is just fucking dumb. Just fucking dumb. And the reason why, to the extent there was an FTX liquidation, well, that should be obvious. Fucking exchange collapsed. But also, price had spent June, July, August, September, October, and started to actually, before FTX, started to look like, all right, well, it hasn't gone lower in 5 months. We went below 20k. We're getting to the end of the bear market. This was a year after the top, so the 4-year cyclers were all saying, oh, this is actually like the area where it bottoms. And it was around 20k. So there was genuinely some signs or hope or whatever, and then the fucking exchange collapses. So you get a bit of a flush. So anyway, fucking rant. That's not how leverage works. People just think leverage, and they think like liquidation maps, and they think they think about someone sharing a tweet about 350 million was liquidated. That doesn't mean anything. It has never meant anything. It's never put $1 in your pocket, and it never will. Because it's nothing to do with fucking trading. It's just slop. Everything you see online is slop. What use is it sharing? 350 million was liquidated. And what? First of all, no it wasn't. It's just made up numbers. And secondly, even if it was real, what does it mean? Well, how does it help you? It doesn't tell you it was a bottom, it doesn't tell you it was a fucking shakeout, it doesn't tell you anything. It's just more backwards looking shit. The reason why you had the first flush, which is when all the over levered retail that still thinks it's long, and all the dumb money and the big money and every type of levered position all gets wiped very fast. That's why it's a cascade. That's why it happens fast and sharp. That flushes out all of the excess. That starts the bear market, like October 10th. That flushes out all the speculative capital, all of it, gone. You drop 20% in a day, you drop 25% across those 4 days, you drop fucking 80% on some altcoins, 99.9% if you're an Atom, but most alts in that flush nuked 50, 60, 70, 80%, all gone. Every single speculative dollar on leverage gone all at once. There's none left. There's no reason for them to be left. They're not coming back. They're totally gone. We'll see them next cycle, but they're gone. What drives the market lower then is that it's a fucking downtrend. It's a bear market. In effect, until it makes new highs, it's a bear market. Or until it makes a reliable bottom and starts to make higher lows and starts to rebuild, then you can start to look at this nice, really good price action you want to see of recovery. We can start to accumulate again for the uptrend, like the thing that we all want to trade, belong in. And leverage perps don't matter at this point. So when you look at open interest charts, they don't matter at that point. Because what drove this wave was Luna collapsing, which led to Celsius, BlockFi, Genesis, Three Arrows Capital, none of which are centralized exchange, retail. These were crypto lending platforms, or in the case of Three Arrows, a crypto hedge fund essentially, that had borrowed money in other ways to get long. They could borrow money to buy tokens, so they owe dollars somewhere, or they owe fiat somewhere, or they use, most of them what they were doing is they were using their coins as collateral. We've got, $1 billion worth of Sol and Avalanche and Luna tokens and a little bit of ETH and a little bit of Bitcoin. Let's put that billion together when it's up here, borrow $500 million against it to lever up more. Then suddenly the net value of all that drops by 30%. Then you're at risk. You have to be patient. I said it all through November, December. It's like, you've got to be patient, because this is just how it goes. That's why I drew out the inside week. Remember, the last week down, drew the high on that at 96 and the low at 80. I said nothing matters until then. If you go back to Beyond Bitcoin monthly preview for November, not for November, for December, or any of the late November Beyond Bitcoins, or December, like, you've seen it all. It's so much about that patience, because in this area here, in these 9 weeks that encompass Christmas and New Year's, people lost loads of money. Not in the campus, thankfully. I've seen most people were trading it pretty well, or just sitting there patiently. But like on fucking Twitter, I saw just online in general, people just spinning themselves around like, oh my God, we're crashing. Oh my God, we're so back. And like, it's inside of 1 week's range and we're just consolidating. It's almost as if when you have 4 expansive downwards weeks going from 115 to 80, it's almost like that's a huge move in a short space of time. And it needs time to consolidate. It's almost like price action is undefeated, because expansion leads to contraction. Trend leads to consolidation. A markdown will lead to a base before the next markdown or markup. An accumulation will lead to a markdown, which will lead to either an accumulation or distribution. That's where we're at. And the only way for this to have any kind of momentum is to the downside, not the upside. Because the only thing that could happen that would be relevant would be somehow we go lower than last week's low this week, which is what I said before. I don't think it's going to happen. I think the bottom's in, but it's not impossible that you put in these type of, oh, it looks like the momentum's stalling because the big long wick, and then boom, we smash through it. But that's rare, and that came after 2 weeks. That was only 2 red weeks, and then it led to one final flush where we spent 1, 2, 3, 4, 5 weeks, and that is much more what we're going to see, whether it's to the downside like this, or even to the upside like this big crash, and it takes 10 weeks, and then it goes back up. Or the lows of FTX, big flush, and we spend time. It's just going to take time. Volatility is most likely going to drop like it did here. It's going to consolidate. Because high volatility is a gift, and we don't get blessed with it. People get too zoomed in. The volatility was super high, but because it was super high to the downside, people think that that's not a good thing. No.
you're talking about making money. When you're talking about trying to have that and needing it to have a big V reversal, and I see this.
price starts to compress at this bottom end of the range, we could very well see a breakout. Because when you get that compression, ahead and make some breakfast. I'm gonna set some alerts. Buyers and sellers are agreeing that this is a the next 4 minutes.
You're so
Just crazy.
not you.
Trending up.
Order filled.
Do it, baby. We're in for that liquidity grab. Trending strong. Right now, we do nothing. Right now, we do nothing, baby. Can do so to absolutely do nothing. Do not interfere with the system. You're in the trade. That's what I see happening. Well, we gotta enter here, man. What the heck? Man, I'm so smart, man. Prices compressing, then we see that candle up. I'm telling you guys, I know what I'm talking about. I know what I'm doing. Now this is a point where an aggressive trader would add into his. This is a point where an aggressive trader would add into his.